We will see problem number 82 from T.S. GREWAL book. You need to calculate inventory turnover ratio. Opening inventory is given, purchases is given, carriage inwards, closing inventory, wages, freight outwards. So in order to calculate inventory turnover ratio, you need cost of revenue from operations divided by average inventory. So to calculate average inventory, you have opening inventory, you have closing inventory also. So you can find the value of average inventory first. See, average inventory is equal to opening inventory plus closing inventory. 2 lakh and 60,000 is directly given in question. Just substitute and you get 1 lakh 30,000. So we have calculated average inventory. And in order to calculate cost of revenue from operation, we can use this formula: opening inventory plus purchases plus direct expenses minus closing inventory, because you can find the information about the purchases and direct expenses here. Opening inventory value is 2 lakhs plus purchases 4 lakh 60,000 plus direct expenses. See, carriage inwards is direct expense and wages is also direct expense. If you see outwards, you should not consider it is not direct expense, it is indirect expense. Take only carriage inwards and wages. So 20,000 and 30,000 minus closing inventory. So this value is also given, closing inventory. And when you substitute and calculate, we get 6,50,000 as close of cost of revenue from operations. Substitute in the formula now. Inventory turnover ratio is equal to cost of revenue from operation 6,50,000 divided by average inventory, that is 1,30,000. We get 5 times and this is the answer. Let's see the next problem. You should calculate inventory turnover ratio. Opening inventory is given, closing inventory is also given, revenue from operation, net sales is given, and gross profit ratio is 25%. Correct. Now, cost of revenue from operation will be equal to revenue from operations minus gross profit. We have already seen this formula before. Revenue from operation is given 6,40,000 minus gross profit. Total amount is not given, but you have the percentage which you need to calculate. Out of net sales 6,40,000, calculate 25%. So you get 1,60,000 here. 6,40,000 minus 1,60,000 is 4,80,000. We got the value of cost of revenue from operation. Now next thing is average inventory. Average inventory is equal to opening is there, closing is also there. Directly substitute and you get 60,000 average inventory. Now substitute the values in inventory turnover ratio formula. Cost of revenue from operations is equal to 4,80,000 divided by average inventory, which is 60,000, which gives you 8 times, and this is the answer. Let's see the next problem now. Question number 84. You should calculate inventory turnover ratio. Revenue from operation, net sales is given 16 lakhs. Average inventory value is directly given. You need not have to calculate anything new. Gross loss ratio is 5%. In the previous problem, the information was given about profit. In this problem, they have given details about loss. Loss ratio is 5%. When you have gross profit, you subtract it from revenue from operation. Do you people remember that? Cost of goods sold is equal to revenue from operation minus gross profit. This was the formula. Now it is, as it is gross loss, you add it back. So you are going to change only one sign when you have gross loss. You just need to add it. Gross loss is equal to, in the same way, just like how you calculate gross profit, do in the same way. 16 lakhs, that is revenue from operation, multiplied with 5%, 5 by 100. You get 80,000 as gross loss. So cost of revenue from operation or cost of goods sold is equal to 16 lakhs plus this loss value 80,000. 16 lakhs 80,000. Yes, we got this value. Average inventory is also given directly. So 16 lakh 80,000 divided by 2 lakh 20,000, which gives you 7.64 times. Let's see 85th problem now. Revenue from operations 4 lakhs, gross profit 1 lakh, closing stock 1 lakh 20,000. Excess of closing inventory over opening inventory. What is the meaning of this? Excess of closing inventory over the opening inventory, which means closing inventory is more than opening inventory by 40,000. So closing inventory is greater than the opening inventory. This is the meaning of the statement. Now we'll see. We'll calculate cost of revenue from operations first because these two details are given directly. Revenue from operations 4 lakh minus gross profit value is also given. Say in this question, they did not give percentage. You need not have to calculate. This amount is given directly. Substitute that 1 lakh, 4 lakh minus 1 lakh, 3 lakh. Yes, we got the answer. Next one is you make a equation. So for this line, we can make an equation. Opening inventory is equal to closing inventory minus 40,000 because closing inventory is more than the opening inventory by 40,000. Correct. So opening inventory is equal to closing inventory is how much? 1 lakh 20,000. 1 lakh 20,000 minus 40 if you do, we get opening inventory. Now average inventory will be equal to opening inventory which you got here plus closing inventory. This 1 lakh 20 is given in question divided by 2. We get average inventory that is 1 lakh. Now substitute in inventory turnover ratio formula. 3 lakhs, this 3 lakhs divided by 1 lakhs, which gives us 3 times.